Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, just taking a look at the data, what it's suggesting, give a most recent update, and having a look at that most important weekly close position on BTC as well. As I get into the video, if you find it useful and informative, why not smash that like button? I do appreciate that. If you're new to the channel, subscribe, and you'll stay up to date with all the video content if you tap that bell and select all the notifications. Do join us down in Discord if you haven't done so already, though. It's a fantastic community talking crypto 24/7. It's completely free, and it is the first place that we go to notify everybody of what is going on in the crypto space. So why not do yourself a favor, keep your finger on the pulse of crypto by joining us down in Discord. Okay. Let's jump on right down into this, right? So to start with, I think it's actually quite important that we reflect on some of the top level data. So let's bring this up, right? This is the stuff that we'd normally go through on our streams. Obviously, we didn't really cover this morning's stream, so what we're going to do is we're going to cover it now, and then this will give you a bit of an idea into the charts data as we kind of progress through the video. So top level here, when I pulled this data this morning, there's 19,275,993 BTC in circulating supply. We take the price when I pulled this data at $23,170. We multiply those two things together, we end up at the market cap, 446.61 billion. So what's important to remember here, I talk about this all the time on the live streams, market cap is only a representation of the supply multiplied by the price. Therefore, a price basically dictates the market cap. Market cap cannot be a barrier to price discovery if it's price that actually controls the market cap. It's also important to note that market cap does not represent liquidity. Market cap does not represent value. It only represents macro level pricing. It shows you a price if you're able to liquidate the entire 19.275 thousand Bitcoin, right? If you're able to liquidate all 19,275,993 BTC instantaneously, right? Which obviously you can't just snap your fingers and liquidate something like BTC. So we know that there isn't that much liquidity, right? You can't do that without affecting the price. The second there's a little bit of selling pressure, the price takes a nosedive, right? So we understand that if market cap really doesn't show us liquidity, it doesn't really show us value, it only shows us macro pricing, we probably shouldn't really focus too much in on it. Now, as we can take a look down here, we have transaction volume in the last 24 hours. $4.99 billion of Bitcoin has moved across the chain. We've had $3.49 billion of trading volume in the last 24 hours, and Bitcoin dominance is about 41.46. I say about because it is subject to the different platforms. Different platforms, whether that is TradingView or CoinMarketCap, or even this data here, for example, will have a different number. This is because market cap is basically being divided by, or Bitcoin's market cap is being divided by total market cap. Now, each platform has a different number of cryptocurrencies listed, therefore a different total number of market cap for total crypto, okay? So understand that although the market cap for Bitcoin should be pretty much the same depending on the platforms that you're looking at, the total number of cryptos market cap might be different, okay? Therefore, you drive out a different dominance number. So we have had 857,000 active addresses in the last 24 hours. We produced 168 blocks in 24 hours at a cost of $258,000. That means that we've got actually block per dollar. We've actually got easier time of it. It's not actually costing terribly too much per block. Now, we have obviously seen here a decrease in the transaction volume across the chain in the last 24 hours, but an increase in block production with reduced fees. That basically means it's easier to basically produce blocks at the moment. Interesting kind of way to kind of look at that outside of kind of things like Glassnode data. Now, over here, we're going to pull this data this morning. It was $23,170. All-time high remains just short of 69,000 USD, and therefore we are 66.2173% from the all-time high. So that's your top level. Let's move on, though, and talk a little bit about the on-chain stuff. We are starting to see a bit more of Bitcoin coming off the exchanges according to our 30-day average bars. We see that here. We can also see that it's starting to come off just a little bit over the last couple of days off the exchanges. So in total, when we take a zoomed out view here, it's 811.53 thousand Bitcoin going onto the exchanges and 829.66 thousand coming off the exchanges. So that's what, 18? Yeah, about 18, just short of 18, 17 point something thousand BTC. basically coming off the exchanges in 2023. That's from the 1st of January through to the 28th of January. So in 28 days, we've only seen 17.9. We'll call it 17.9. Thousand Bitcoin coming off the exchanges. That's not a huge amount, considering we are seeing a lot of narratives being spun that we're in a bull market, and we are seeing whales buying, right? Well, they don't buy much if they are buying any at all. In fact, we're going to jump down into some wallet counts and show you my point of view and my perspective on that in a second. I'm not going to talk about the hodl whales. We'll do that tomorrow on the Twitch live stream that we do. Let's jump over into the inflows and the outflows. Here we can see that pretty much over a typical weekend, the volumes drop down, right? It's only retailers that are involved in BTC trading. Professionals are not really too engaged in crypto markets over a weekend. So low volumes. Here we can see that we had 15,652 BTC going onto the exchanges and 16,930 BTC coming off the exchanges. Slightly more leaving the exchanges recently in the last 24 hours than has gone on to the exchanges, I should say. So what do we see here from these lines? Basically, we're seeing that 17,000, BTC coming off the exchanges slowly over a period of time. Not huge spikes to data. Now, we can, of course, acknowledge that there is massive spike right here of around 20,000 BTC. But obviously, when the red line is above the green line, you're not really seeing that accumulation that we're being told is there, not from an inflow and outflow point of view. Now, as we kind of come up into retail size wallets, we have Dust here. Dust is basically 0.01 BTC or more. This basically is rocking a whopping 11.475,000. So 11,475,725 different wallets that have over 0.01 BTC in them. So there's quite a lot of wallets out there holding Dust, essentially. Now, as we come up into the higher sized wallet counts, we can see that actually up here, 4.215. So basically 4,215,323 wallets have more than 0.1 Bitcoin. So if we take the 11 million minus the 4 million, we can kind of see there that there's a difference between, anyone who has less than 0.1 BTC, for example. We can kind of ascertain there's quite a few million wallets with absolute Dust. Okay, so interesting to kind of take a look at it from that point of view sometimes. Now, we do have an increase in wallet sizes here for the retail investors. These are all retail investors, in my opinion, the krill, the shrimp, and the dolphins, over 0.1 Bitcoin, over 1 Bitcoin, and over 10 Bitcoin. They're inclusive, which basically means the krill include the counts for the shrimps, and the shrimps include the counts for the dolphins, and so forth. Okay, now I do it this way because it means that I can see a linear curved line rather than a spiky line, which we'll take a look at the Kraken wallet in a moment, and you'll see a more spiky line as there isn't really terribly too much occurring in there, and I'll show you what that looks like. So it helps us with nice linear curved lines. It's a nice way of kind of looking at the data. So we do see increases here day on day, reasonably flat for the shrimps, slight uptick here with the dolphins, but they actually, if you just zoom back a little bit, you can kind of see they have been selling. So retail investors have been selling recently as these highs, and you can see even here, if we were to think of an elasticity curve, right, and we think about the demand coming in as price goes up, well, price has gone up to a point where the demand seems to have, almost plateaued. So it's interesting to kind of see how this is going to react. Are we going to go up anymore if the price does come down, or are we actually going to start seeing retailers selling off their assets because things are overvalued at the moment? And now, as we come up into the larger size wallets, we can, of course, acknowledge that Bitcoin sharks, Bitcoin whales, and Bitcoin Kraken over 100 Bitcoin, over 1,000 Bitcoin, and over 10,000 Bitcoin, and we can acknowledge how they're reacting. We've got selling pressure on the sharks, we've got selling pressure on the whales, and there's actually a reasonable amount of accumulation occurring here on the Kraken. Okay, so this is what I mean by a spiky sized wallet. You can kind of see that it goes up and comes down pretty rapidly and pretty fast because it hasn't really got too much in terms of a number of wallets. We've actually just talking about 116 wallets. Okay. So the Kraken size wallet I liken as cold storage for whales, so it doesn't surprise me that the whales go down and the Kraken goes up, although we have to bear in mind that the whale wallet counts do and are inclusive of the Kraken. So when we start seeing a decrease here, we have to assume that actually there's a consolidation of wallets from this end into this end. Okay, so we think maybe there's 10 wallets operating as whales, they move into a single cold storage wallet on the Kraken, for example. Okay, and that's why you see a decrease here but an increase on this side. And so I imagine that they are operating multiple whale wallets and then only a single cold storage wallet. That's kind of how I liken these things to it. Now, the other thing to kind of bear in mind here is, yes, we have price going up and we do see whales selling, okay, and they were selling, every time the price has come to a decent level. In fact, if I actually bring up our 365-day range for the Bitcoin whales, what do we see? Well, we can see a pretty interesting move to the downside. Every single time some moon boy has called out a bottom, let's take a look over here, for example, in May of 2022 or even June of 2022. What is the things that are occurring here? Well, we actually see maybe a little bit of accumulation, to be fair, in May, but actually then just dumping down. Now, June is interesting, right? Loads and loads of moon boys across the various different social media platforms were saying the bottom is in June. We've got all of these fantastic indicators that are telling us that the bottom is in, right? And, anyone who's bearish right now is just, they're just kidding themselves. Right now, what do we see here in this chart data that is inclusive of why we had to go down into a new lower low? I know there's people out there who want to say, well, no, June was the low. June was the low. If it wasn't for FTX, it wouldn't have had a new lower low. And I call bullshit on that. I call bullshit on that because this data right here tells us exactly why there was going to be a new lower low. And that's because whales were selling the bottom. Okay, if June was the bottom, whales were selling that bottom. Now, here's a question you have to ask yourself. Ask yourself this. I can't answer it for you. But basically, if you believe the bottom is in, then you equally believe that the whales are selling the bottom. I said this in June, and I'm saying it again now, and I'm saying it for good reason. I'm saying it now because what do we see? We see a continuation of this selling pressure from these whale wallets. So the question you have to ask yourself here is, are the whales dumb enough to be selling the bottom? Or are they in fact wrong? Okay, so maybe they are in the right. So actually, I should say that differently. Maybe whale investors are absolutely dumb now, that they're stupid. They are selling the bottom, and they're going to miss out on this opportunity. They're going to have to buy it back more expensive. Or alternatively, they are right, and we are in the wrong as retail investors. Answer that question for yourself, right? Do you think the whale investor is wrong, or do you think they know what they're doing? I personally think they know what they're doing. We've seen this, and we've been tracking this for months upon months. And here in June, you can see they were selling into that pump as it moved to the upside, right? And then again, you see it coming down into these lows. Like they're continuing to sell, even in these flat periods here when moon boys are buying up. Then November comes along. What do you see? Yeah, they're selling. They're selling into the June, and they're selling all the way into the movements to the upside. They then go sideways here. And then a fantastic opportunity comes along, right, with price moving up. And what do? Well, they come down lower than they were over here in December in their wallet counts. So ask ourselves this. Is this the bull market starting? And are the whale investors dumb enough to be selling now? Or do they in fact anticipate a move to the downside in terms of price, new lower lows potentially, and actually they are not done anywhere near the amount of accumulating that they need to? I can't answer the question for you, but this data to me tells me that big money is running from this space, and they have been doing so since up here in March of 2022. Okay, now retail money. Well, retail money seems to love all of the moon boys predicting the bottoms, right? So over here we have the June, we can see an increase. Over here in September, we can see wallets increasing. FTX comes along, it's just a final dip, guys. The bottom's now back in. We were wrong over here. A black swan event, no one knew that was coming. Really? No one? Okay, yeah. So we obviously have to think about that. Okay, they're selling, the whales are selling, but we're going to buy this dip at the bottom. And look at this, huge amounts of withdrawals from the exchanges. Notably, understandably so, right? We don't want to stay on exchanges if we don't trust them, right? So we do see a natural growth here to be fair to everybody involved. And we're plateauing as price comes up here. This could be the opportunity that retail investors need to really reassess their positions. Now, why is all this important? This is massively important because if we actually just reflect back into 2018, what do we see? We see the same story, just on a different time zone. Say time zone or a different time, same story. Bottom was in February 2018, massive crash. We're corrected. We can now go to the moon. So retail investors buy. No, actually, no, we were wrong about that, but it's just a dip. It's okay. This is now the bear market bottom in April of 2018. So retail investors go on a buying spree. Look, we were wrong. This is the third time. We're definitely at the bottom now. We're going to the moon. Right, and you can see the spikes to the upside afterwards. You get a bit of a relief rally, right? A bear market rally, pretty substantial one. And retail investors are like, yes, we're going to the moon. We're buying, we're buying, we're buying. All until they get to this flat period here when they realize, actually, this is trending down. This is not going in the direction that they want. So they start to take this opportunity to come out during this flat period of trading activity. And then it obviously comes down into the final lows where eventually they do, again, this is now the bear market bottom, we'll buy up. All that pain that they went through up here buying at premium prices only to sell down here and then buy back a little bit deeper in the price action. Now, why is this important? Well, when we start reflecting on what the whales were doing back then, we can quite clearly see that this flat period in time is basically the transfer of wealth between the retail investor and the institutional investor. Here we can see massive wave counts, wallet counts increasing, okay, during this flat period. When we see these guys selling, we see these guys buying, okay? So then that gets us thinking, what about the Kraken? Well, the Kraken, as I said, was cold storage for the whales, right? Like it's a tool to be used potentially. And here you see in the bear market, nothing but accumulation. Maybe, of course, you know, and to play devil's advocate, you often see people in the comment sections saying and asking the question, and rightfully so, you should ask the question. And that should be, well, maybe, you know, this time is different. Right, maybe this time is different. That's the thing that you hear. And, well, in reality is that, you know, people look at the Kraken size wallet and they say, well, maybe this time, you know, whales are actually just bigger players. Maybe they're bigger players now and, you know, they're not going to act the same way as the Kraken size wallet. And the other side of that, or the flip of the coin, the other side of the coin would be that maybe they've split their wallets into 100 different smaller wallets or 1,000 different wallets, smaller in size to disguise their movements. To be brutally frank with everybody, they don't give a shit. These kind of institutional whale investors, they don't care. They're just going about their business. Retail investors behave emotionally. Whale investors don't, and institutional investors don't act emotionally. It's just moving the money around. They're not going to be making their lives harder just to be able to, you know, disguise their movements. They don't care enough to kind of disguise their movements. They don't need to disguise their movements. They are just bullies in this space, essentially bullying their way through it. So back to the Kraken size wallet, we saw them in 2018 accumulating during the bear market, only to flood the markets with excess Bitcoin, dragging the price down into the actual bear market low. Do we think this is going to repeat itself? Well, let's take a look at the current behavior of these wallets. They've been accumulating during this bear market. So I think they're behaving the same way as they did in 2018. They can see accumulation in the same way as 2018, and potentially they flood the market again, dragging the price down into fresh lows and wrecking retail investors on that journey. So I liken all of these wallet counts that we see here in terms of this data as a journey that we're still on. And until big money, such as the whale investors, are actually coming into this space in a more meaningful way, I don't think retail investors should be getting too excited about a move to the upside. So on that note, we should probably now transition into the charts for BTC, and we're going to talk about that weekly close position. Okay, now I'm probably not going to put timestamps in these videos, mainly because I think that these things transition to a point where it tells the entire story, and we shouldn't really just be focusing in on trying to skip sections that, you know, you don't think are relevant. The whole thing is relevant, and we should spend the time to actually, you know, pay attention to it. So let's move down into the price action on the charts, right? We can't just blindly draw a couple of trend lines on here and think, you know, we're going to fantastic heights. Instead, we should actually, you know, pay attention to internal structures and what those structures are telling us. Now, Elliott wave theory is one of those things that I use. It's something that is actually reasonably complicated, and why it's probably still kind of, you know, pinned in as a theory and people kind of debunk it. Actually, there's a lot of rules with it, and if you follow the rules, it works incredibly well. So I like it. I've done a video course on it. It's linked in the description below. You know, I'm actually running a 40% off flash sale this weekend only, using Flash40 as a code. yeah, check that out if you want to know more about Elliott wave theory. I think it works incredibly well when you apply it correctly. Unfortunately, in this space, it seems that it's too much hard work for some people to actually learn how to be analysts and to actually understand this data properly, and instead they much prefer the easier retail methods of simplistic approaches. And that's unfortunate, because I think if you actually spend the time to practice and educate yourself on Elliott wave theory, you end up much better off. So let's jump down into this. What do we see so far? Well, it's all quite corrective. But as I said a few videos ago, this had the potential to be an ending diagonal structure. I don't think we are in the realms of that at the moment. I think actually this is not an ending diagonal at this point, and we potentially are looking a little bit on the tougher side of things. So let me show you my thought pattern on this. So we have corrective structures coming in here. Now, please note, I'm just using ABCs. Technically speaking, these are not ABC structures, but I'm just using ABC because it's easier for the video purposes. But here it looks like we have these corrective structures. Okay, so we come 3 up, 3 down, 3 up. The whole thing here essentially is a 3-wave structure like this. It does look like we've met those requirements. Let's go ahead and check, because we would expect things to land between 1 and 1.236. So it's actually a little bit higher potentially to go here. We would potentially think about a little bit move more towards the 23,864 to 24,101. That would be more in line with our expectations of that C wave. But again, that C wave would only be a typical movement. We've met the minimum requirements by peaking above the A wave over here. Okay, so we're struggling, and you can kind of see where we're struggling right up in there. We obviously do have this bigger range at the top here. This is the area between 24 and 25. There's a lot of liquidity up there, so we'll be keeping an eye on that. You can throw the liquidity, and you can see it right up there on 25.21 or 211, I should say. You can see it right there, and you can see a little bit of liquidity. There's actually a reasonable amount of liquidity now stacking in long positions, so bear in mind that the liquidity is probably going to, or the market's probably going to reverse on us at some point soon. Now, our weekly close position, we'll take a look at that in a second, but I do want to kind of reflect on this, maybe having a correction down, and we nest this up a little bit further before we do. If we actually peak up higher than this one right here at 23,816, then great. We can mark, we mark this as an invalidation, an A, B, and C structure like that. That would not be a thing, and so we can kind of move on from there. Now, on our stochastic RSI, we're overbought on our hourly chart, we're overbought on the 4-hourly chart. The 8-hour, though, has still got some progression upwards. So we could see our 8-hour come up into the overbought range. The daily is actually correcting down already. So again, that's still on its journey. Here you can see we're in this channel. So testing up that upper range at 24,000 could be a thing. We could test that. We can go overbought on our 8-hour chart as well, and we're still inside our channel. And of course, as I often say, guys, higher highs and higher lows have a tendency to break down, not break up. Be really cautious here. This is not a bull flag. Bull flags don't tilt up, despite the fact that anyone on Google can create a Wikipedia page and tell you that bull flags do not tilt up; they tilt down. Essentially, this higher highs and higher lows have a tendency to break downwards, not upwards. Bear that in mind. We talk about those all the time. Specifically, if I zoom out here on our daily chart, you can see all these higher highs and higher lows, and they're breaking down. There was, of course, this scenario over here, which was because of the DXY, in my opinion, failed to adhere to this. Let me go ahead and draw this in. Right, we had ourselves up with the higher highs in here and the higher lows in here. Okay, and I was saying, look, we have a tendency to break down from these, and instead we broke upwards, right? And that was my bad, and I apologize to everyone for that. But you can see here the higher highs and higher lows, and we actually broke up. I think the break to the upside, though, was caused by the DXY dropping in value, meaning you need more dollars to buy Bitcoin than you did a few days earlier. So on our daily chart, what's the positives? Well, the positives are that we're above the 200 EMA. The 200 daily EMA is at 21,176 on the USDT chart. Note that if I do come over into the USD chart, that is different. It does change a little bit. So understand that USD and USDT are two different prices and therefore have different averages associated with them. So just kind of bear that in mind. So that's a positive. There's also the resistance a little bit higher in the price chart up towards that $25,000 level. So we can be optimistic about maybe hitting that and grabbing that liquidity, but it's not a guarantee. If we're going to move up in the market, I think it has to happen early part of this week. If it fails to do so, then unfortunately, I think we're probably going to get a breakdown from Wednesday onwards. It's been green for quite some time, and I don't think the Fed are going to be overly friendly with their rate hikes. I do not think now is the time to pivot. Now is the time to double down on your aggression, and I think the Fed will do that. That's my opinion on it. So we'll see how that kind of plays out. So on our daily chart, yeah, there's some positives here. We have the potential move up higher, and we are above the 200 EMA. The weekly, on the other hand, the 200 EMA is our resistance, currently 23,700. And this is where the weekly close is going to be quite an interesting thing, because if we can close above the 200 weekly moving average, or the weekly EMA, the exponential moving average, then that hasn't happened since, well, I'd have to actually come over into a totally different chart because it's not on USDT pair. So you can see it'd be the first time in the bear market here that would happen, and that would potentially be a bullish signal. The 200 EMA from a traditional finance point of view is, of course, the trend filter. When we're below it, we're bearish, and when we're above it, we're bullish. And a closing above the 200 EMA could be deemed quite bullish indeed. I still think you'd correct down, but it might actually be an indication that things are looking a little bit better for Bitcoin. So keeping a close eye on the weekly close, anything above $23,710 could be deemed quite bullish. We'll have to see. But as I said, we are overbought on the weekly. We're overbought on the 4-hour and the 60-minute. The 8-hour, it can go up into the overbought area, and the daily is already correcting down. So we could potentially see a bit of a move downwards here on these time frames. Now, we want to be a little bit cautious and a little bit wary where possible. Now, the other thing I want to do is just jump over to our daily, turn the stochastic RSI off, and bring in the volume profiles. Now, the volume profiles, as I did say earlier, right, up here, we have the higher highs and the higher lows, and these have a tendency to break down. If we actually take a look at this, volume is decreasing and has been decreasing since the 12th of January here. Okay, and if we zoom out even further, we can acknowledge that actually volumes are down as a whole, even all the way back since November, right? There was high selling pressure up here, and volumes have decreased quite a bit. Although they've spiked up, that is still quite bearish. We see a decrease in volume. And it's bearish because what we've gone and done, guys, is we've gone up into a higher high whilst volume is decreasing. That wouldn't be overly too positive. Now, we can go a little bit further than this, right, by taking a look not at the volume profiles, but the RSI profile. And again, we have a very similar setup. Over here, we can have, for example, the higher highs in price. Okay, and we have got a higher high in our stochastic RSI. This is okay. You're allowed to do this. This is not bearish divergence. However, if we zoom out just a fraction further and bring our price action over to here, then all of a sudden, what do we see? Well, we do see then bearish divergence. We have a higher high on the RSI, but a lower high on the price action. It is minor at this point, so we could still flip and turn this around, but it's worth pointing out that things here on this macro scale are a little bit concerning. Okay, and we can't get too excited too fast if we haven't got everything lined up quite nicely for us. So I want to be quite aware that I'm not saying that we have to have new lower lows, but we do not have large whale investors actually buying right now. We can see that from the whale and wallet count data that, you know, they are continuing to sell on retail, not buy on retail. And you can cut the data differently, and you could omit 10,000 BTC wallets or higher and just look at, you know, wallets between 1,000 and 999,999, if I can get my words out. And you can make it look slightly differently. But if we actually include 10,000 BTC sized wallets, well, yeah, no, things are not looking that positive at all. So let's kind of take things into consideration, balance things out where possible, and we should draw our own conclusions based on this data that we have available, right? I'm not manipulating it in any way. I'm just kind of telling it as it is, and you guys can make your own informed decision as to whether you think things are bullish or bearish. Like I said, I'm not necessarily saying that we have to have new lower lows. I do think there's a high probability of that, though, considering actually in the real world, there's a lot of companies going bankrupt, lots of assets that they currently hold that are tied up in those bankruptcy hearings and will eventually hit the market and will be sold off. They'll be sold at a discount, potentially over the counter, and then sold on retail investors, and people will automatically make instant millions. So we have to kind of bear in mind that there's a lot of stuff going on in the real world that could have a pretty negative impact on the stock market, on the inflation rates, the interest rates as a whole, unemployment rates, and all these things. And then we start thinking, well, who's going to be buying? Okay, if we have all these real bad things happening in the world, you know, who's got the money to be buying and flowing and flooding, you know, the market with fiat? we are not in 2020 where they're turning on that money printer at the moment. Okay, turn on the money printer, then the markets will go green because there's excess money in the system. We're now on the other side of it, right? Which is basically, let's make people poorer so that I don't buy. And I don't think the Fed are going to ease off on that. I think they're still going to be aggressive, and they're not going to stop now, I don't think. I think we're going to see continuation to it. And I think, yeah, we've seen a lot, unfortunately, in green, and a lot of people going bullish only because the DXY has dropped down in value. I think that DXY is going to flip on us, and cryptocurrencies are going to absolutely plummet. So be cautious here. A correction is due. I'm not saying that we have to have new lower lows. I think there's a probability of new lower lows, but a correction down has to happen at the very soon. I don't know when, I can't time the market, but soon there should be a correction in the markets, whether that's just a quick 50% retracement of this move upwards, or it could be a 60% retracement, 40% retracement, but a retracement nonetheless. Profits are going to be taken, and markets are going to cool off, get corrected, and then move back upwards. Okay, so there's bullish scenarios here, there's bearish scenarios here. I think there's a high probability of lower lows personally, but I'll see how the correction goes down and map it out. And if we have a bullish corrective structure, then actually, why not flip bullish, right? There's a time to be bullish and there's a time to be bearish. And if the bottom is in, that's fantastic. We'll buy the retracement. We talk about this. And if, of course, I'm wrong, or maybe we have a bearish structure emerging to the downside, well, in which case that's fine, because we've got a plan for when we have new lower lows. So have a plan for either scenario. A correction is due. We cannot continue to move up like this. That's unsustainable. Yeah, we'll see how we kind of get on. I'm going to call this video right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, check it out, guys. I don't think you'll be disappointed by what you find down there. Until the next one, have a fantastic day.